what's the exact likelihood of you making money with leverage ETFs? More specifically with the TQQQ. And to answer that question, I will run thousands and thousands of simulations using something called the Monte Carlo simulations. I have built a Monte Carlo tool that is the same that is used by hedge funds and quantitative funds. And I'm going to run thousands of simulations and show you what's actually the likelihood of the TQQQ or other leverage ETFs actually making any money. And why is this important? Well, because, as people say, past returns are not guaranteed of future returns, right? Sometimes history does not repeat, but it can rhyme. But there are, you only have like 10 years, the next 10 years to invest, and you cannot run that many simulations over these next 10 years. Running Monte Carlo simulations allows you basically to go back in time like 1,000 times. In this specific video, we are going to use 1,000 Monte Carlo simulations for each scenario that I'm going to share with you. And I'm going to run 1,000 simulations for 1-year periods, 1,000 simulations for 5-year periods, 1,000 simulations for 10-year periods, and 1,000 simulations for 15-year periods. And of course, in reality, you will never be able to do this unless you are like immortal and you have thousands and thousands of years to experiment. So I'm going to run these simulations. I'm going to tell you exactly how much money you can make in these 1,000 different simulations. Is going to give you very accurate prediction of what can happen in the future, what can happen if you are unlucky, what can happen if you are very lucky, what can happen if you are in the mean, if you are in the middle. And this is very interesting video because the results are very, very surprising. And you also see why actually leverage ETFs should be used for long-term investing. I'm going to prove with numbers and with our simulations that long-term investing into the TQQQ will perform in the majority of cases, perform the better the longer you will hold it for the long term. All right, let's get straight into it. Now, you might be asking, who is this guy? My name is Henry. I'm a hedge fund manager based in Hong Kong. It's Hong Kong Friday night, and I'm recording this video because I really want to get this information out. So, without further ado, let's get straight into it. So this is my Monte Carlo tool. If you are part of my Henrique Wealth Academy, link in the description, you can have access to this tool also for free. What I'm going to do here is I'm going to select the asset. You can do these Monte Carlo simulations for indices, individual stocks, sector ETFs, bonds, crypto, but we have now selected here equity index. We selected NASDAQ 100 because the TQQQ and the QQQ follow NASDAQ 100. We use the Monte Carlo simulation. I have other methods here, including geometric Brownian motion, Gauge model, and so on. And we will use a 3x leverage to simulate the triple leverage ETF, okay? Time horizon, now let me switch here to 1 year, okay? And let's run the simulation and let's see what happens if we invest in the TQQQ for 1 year. So you invest for 1 year, the final median value, the median value is basically the value that is in the middle. So we are running 1,000 simulations. So the result number 500, the one that is in the middle, will have these kind of returns. So we'll have a 33% return on that one result in the middle. But there are 1,000 different results, okay? There are 1,000 different paths. There are 1,000 different years that we are simulating here. But the year that is in the middle, you'll get a 33% return. So if you have invested $10,000, you now have $13,000. But also look at this information here. Only 65% of the paths, only 65% of these 1 year simulations were positive. Actually, 335 of them, out of 1,000, 33% of them were negative. And only 56% were above the benchmark. And the benchmark here being the NASDAQ 100. So the results, if you have invested only for 1 year in the TQQQ, are okay, but not very amazing, okay? So actually 1/3 of the times you actually lose money if you invest in the TQQQ for 1 year. We have here all the paths. This is the chart with all the different possibilities, the 1,000 different possibilities. And I also like this one here. This one is interesting because it tells us the median, the mean. Okay, the mean here is basically the average, and the average is skewed because we have some outliers. So we should look most of the times at the median. And we can see also that the 5th percentile lost money. So if you are at the bottom 5%, you actually lost half of your money. And if you are in the top 5%, the 95th percentile, you actually have $38,000. Let me show you here also the simulation details, where you can see here that if you are in the bottom 25%, as you can see here, you still lost some money. If you are in the middle, you made $13,000. If you are top 5%, you made $38,000. And what did actually the TQQQ did in this period? Well, actually, last 1 year, it performed way better than our simulations. Last 1 year, the TQQQ went up by 139%, okay? You can see here on my chart, it went up by 139%, so you'll have transformed $10,000 into $23,000. So actually better than the Monte Carlo simulation. But let's test other periods, okay? Because my point here that I want to show you is that shorter periods are very unpredictable and they can perform well or not, but there is a 1/3 probability of you actually losing money if you invest in 1 year periods on the TQQQ. But what about 5 years, okay? 5 years, do you think you make money? Do you think it's better or worse than 1 year period? Okay, let's jump back here into our tool, and I'm going to increase the period here to 5 years. 5 years, let's click Run Simulation, and interesting, so 5 years, our initial investment of $10,000, the median value, the value in the middle will be $41,000. Okay, now starts to get more interesting, right? Median annual return 33%, and we actually make money in 82% of the time. Remember, in a 1 year simulation, we actually lost money 1/3 of the time, 33%. But in a 5 year simulation, we lose money only 18% of the time. So we are increasing our chance of making money by increasing the time frame. What I always tell people is that volatility is risk in the short term and it's profit, it's opportunity in the long term. You know, because time dilutes volatility. If you need money in 1 year from now, don't invest in leverage ETFs. But if you only need money in a few years from now, maybe you can do a small allocation into leverage ETFs. And you can also see here that out of the 1,000 simulations, 659 were actually above the NASDAQ 100, above the QQQ. And we have, let me jump here also to the simulation details. And we have here our percentiles. Even if you are in the bottom 25% of the results, you still made money, okay? Even if you are at the bottom 25%, you transform your $10,000 into $14,000. If you are at the value in the middle, you have $41,000. If you are in the top 25%, you made over $100,000, $122,000. And if you are the lucky guy that is top 5%, you made over $500,000 in only 5 years. Okay, this is very crazy actually. And what did the TQQ did actually in reality for the last 5 years? Let's see what was the reality. And for the last 5 years, it actually returned 251% in total. So you have transformed $10,000 into $35,000. So $35,000 is actually not very far from our 50th percentile, from the value from our median value, okay? So very, very interesting. Okay, now I'm going to do the 10-year simulation. I think you already see where this is going. 10-year simulation, it will blow your mind away, because if you invest in the TQQQ for a period of 10 years, it gets very, very interesting, okay? So let's run here the simulation for the 10 years, and I click Run Simulation, and wow! So the median value for a $10,000 investment at the end of 10 years is $178,000, okay? I'd like to know if there is any other investment that is capable of doing this. the median return 33%. And now you can see that only 8% of the times we were below initial investment. So we only lose money in 8% of the times using leverage ETFs such as the TQQQ if you are investing for a 10-year period. And 72% of the time we actually outperform NASDAQ. We outperform the non-leveraged version, the QQQ. So it gets interesting and more interesting the longer the period that you are simulating. Let's look here at the percentiles. Even if you are at the bottom 25%, you still more than triple your money. Of course, if you are bottom 5%, out of the 1,000 worlds where we have made this 10-year simulation, there are still 50 worlds or so where you lost half of your money, okay? There is still a 5% probability of you losing actually or ending up with half of the money that you started, okay? So these ETFs are dangerous, are volatile. But there is also a 5% probability that you end up with millions of dollars, okay? So 95th percentile, it's $7.3 million for a $10,000 investment. And the value in the middle, the 50th percentile, is $178,000. $178,000. Does that match the reality? So what I'm going to do now is jump back here on TradingView, and the period for 10 years is starting in 2016. And what we see here is that if you have invested $10,000 in 2016 in the TQQQ, you'll now have over $400,000, $410,000. So actually $410,000, the reality is better than the simulation, because the simulation, it tells us that like the value in the middle will be $178,000. Actually, if you have invested 10 years ago, $10,000, you now have $410,000. Okay, but what I like about these Monte Carlo simulations is that you can see all the range of possibilities, okay? There are worlds out there where you end up with $5,000, okay? What happened in reality over the last 10 years, you end up with $400,000. And what can also happen is possible, you can end up with millions of dollars, as you can see here. So this is much better than playing the lottery or going to the casino, definitely, because as you can see, the odds are by your side. Okay, one final simulation. Let's look at 15 years. 15 years is going to give you very, very, very crazy values. So let's run the simulation for 15 years. And what we have here, the median value is $772,000, very crazy. And in the period of 15 years, only 3.7% of the times you lose money, only 3%, okay? So the longer the period, the more likelihood you have of making money. 96%, 96.3% of the past you made money, and 79.5% you beat the NASDAQ 100. Let's look here at the simulation details, and you have even if you are at the bottom 25%, if you got unlucky, even if you are at the bottom 5%, you still made money using the TQQQ over a 15-year period. If you are the value in the middle, the 50th percentile, you made $770,000. And if you are lucky to be in the top 5%, you made over $68 million. Now we are talking here about millions of dollars, okay? Is this any realistic? What do you think actually happened over the last 15 years? So actually, the TQQQ was launched 15 or 16 years ago, so luckily, we can have access to that data. So I'm going back here to TradingView and give you the right simulation. So I'm going to put from 2011 until now, okay, $10,000. And if you have invested $10,000 from 2011, as you can see here, you'll now have $2 million, okay? So this is really one of the things that I like about leverage ETFs, such as the TQQQ. It's you can transform a small amount of money, $10,000, into $2 million, okay? $2,074,000. That's the reality, okay? While here our simulations, it shows that, if you are top 25%, you could have $4 million. So we are talking about some amounts that can really present financial freedom. So what I'm saying with this is obviously you should not go all in into leverage ETFs such as the TQQQ. Don't go all in, okay? Because you might end up in one of those worlds where your bottom 5% just got unlucky, the market's crashed, and you will end up with less money. But in most cases, you will end up with way more money, and it's way more likely that you make more money, especially over prolonged periods of time, because leverage ETFs have the capacity to compound gains very, very quickly, okay? Because in most of the times, you're actually in bull markets, right? Probably you already know by now, I'm always talking about it, but for every 7 years on average in the market, you have 1 year or 10 months of bear market, okay? So we have 7 years on average bull market, we have 1 year of bear market. So if you believe that we will continue somehow in the bull market, it's much better to be a little bit more invested in the market, and no one can time the market anyway, right? There are signs, you can have signs that whether the market is more expensive or cheap, but we cannot really time the market accurately. So the best is really to have some exposure to the market, and you can allocate a small percentage of your portfolio into some leverage ETFs, okay, in order to maximize this compounding in your portfolio and perhaps get some of the results that I show you here. But okay guys, I'm not a financial advisor, you know, I'm just sharing what I've been doing and how did I retire in Hong Kong, one of the most expensive cities in the world. This is basically what I do every day, is to share with people, you know, like how to retire earlier, how to build your wealth. And if you are interested, you can check the link in the description for the Henrique Wealth Academy. I hope to see you there because there is a free 7-day trial. You don't need to pay anything, and you can start watching my leverage ETF course, which is 4.5 hours about leverage ETFs. It's the only leverage ETF course out there. So if you're interested, check the link. You don't need to pay anything. You're within the 7-day trial. And I'll see you guys soon. If you like this video, give it a like and subscribe. And I'll see you soon. Bye.